Welcome. What I'm going to talk to you about today is just an introduction into financial aid and prepping for, in this case, it's the 2018-2019 school year of going to college. So if your student is currently a senior, this information is very pertinent to you. Obviously, if your student is a junior and sophomore, etc., going on down, or in different graduating years, then you just add on years as we move forward with any of the discussions that I have. What this is actually a PowerPoint that comes from College Options. And College Options is an organization here in town in Reading that services the 5 counties, Modoc, Siskiyou, Shasta, Tehama, Trinity, in terms of helping you navigate the process of entering college. And they have a great wealth of resources and information available. You can schedule appointment times and go down and walk through financial aid with them as well. So I'm just going to walk through a little bit of what they have for information. The first question is, what is FAFSA? FAFSA, free. That's the key word there. Free application for federal student aid. If you're ever going somewhere or someone's trying to get you to pay to apply for this, you're not in the right place. All right. So FAFSA is a universal way for everybody to be compared, apples to apples, oranges to oranges, in terms of the different characteristics and qualities that determine what type of aid you can receive. And this is the process that you would have to go through for a lot of colleges also, even if you want to do just like a work study. So grants, loans, scholarships, all of that is based off of completing the FAFSA. All right. And what are the major components? There they are, those 5 components. Income, students and parent. Assets, same thing, parent and student. Number of people in the household. Number of students, number of children in college. It does not relate to if parents are in college. And then the age of the oldest parent. The reason why I'm talking to you now is that October 1st is when the portal opens and you can start the process. All right, so October 1st, it opens using last year's tax information for next year's college process. All right, why start in October? Because it's earlier to get it done and and meet that deadline as soon as possible. The very latest you can do it is March 2nd. Well, if you're in the process of applying for colleges now, which I hope you are, early on in November, getting those applications in December, January at the latest, but most colleges have like a December 15th deadline. You're going to want to be getting on this information as well, sending it out to all the potential colleges you might attend. Now, if your child has said, no, this is the one place I'm going to go, that might be fine and dandy. Send your FAFSA on to as many places as you possibly can think of that they might attend. All right. And if this is your first time through it, you're going to get through and think, oh my goodness, that was a lot of work. Thank goodness I'm done. Well, you're done for this year. FAFSA must be completed and redone every year that you have a child in college. So if this is your first of many children, then welcome to the world of FAFSA. Maybe you can run a webinar next year and train parents on the ins and outs of what you have to do. All right, those are the types of scholarship available, so types of financial aid, I should say. Grants, scholarship, free money, loans, different types of loans depending on how you qualify within FAFSA, and then work study. Most colleges, if you are still short on money, you can get a job working at the college and the money goes directly towards their tuition, but that requires that they have filled out FAFSA. Financial aid opportunities. This is for if you have limited middle income families. Different types of grants you can get. Grants are free money, Pell Grant, Cal Grant. Cal Grant, let me just say the Cal Grant right now is originally based off of your child having a 3.0 GPA during their sophomore and junior years. Sophomore and junior years 3.0. Now, there will be a second swing that happens after the end of their senior years where they take a look at your sophomore, junior, and senior year. So maybe one of those sophomore and junior wasn't the greatest and you're just a little under 3. Senior year was great. You finally kick it up and over 3. So that number could grow if they get up and over that 3.0 limit. And that information and all those GPAs we submit as a school on your behalf. You do not need to submit or request that from us. We do that automatically. BOG is a board of governors. There's a fee waiver that you can get. Far more common in community colleges, but it is out there, and there's applications that go into that. Oh, and all of these are only applied to accredited colleges in California. So just like our high school is WASC, Western Association of Secondary Schools and Colleges, most colleges out here have that same accreditation. So it's only through accredited universities, and you can check most of your typical community colleges and four-year colleges will indicate who their accreditation organization is as well. Financial aid, and then there's for higher income families. So for California middle class scholarship, 10 to 40% of CSU or UC fees are available, access to merit-based scholarships, access to student loans, and information there. It's not a, obviously, if your income is higher, you're going to be qualifying for less. And we're going to walk through a couple scenarios here in a moment. Here it is. It's not the greatest slide, and you might have to zoom in to see some of this, but if you are applying for Cal Grant, first and foremost, remember, student had 3.0, and you're a family of 5, if your family adjusted gross income is $106,000 or less, $106,000 is the ceiling for what you'd be able to make in order to qualify for Cal Grant. All right, and if other things go into place, there's Cal Grants A, B, and C. Again, far more detail than I can explain in this short amount of time. So I would suggest that you reach out to College Options, set a time with them. They'll tell you what information to bring, and they can walk you through specific details related to you, your family, family income, etc. All right, and so then here's the award amounts that you potentially could be eligible for at CC for community colleges across the top, CSU schools, UC schools, independent, and then for-profit universities. All right, for for-profit universities, it says 4,000. You know, there's a amount if WASC accredited before July 1st, 2012. They tell you what the amount there is. So it varies depending on how and what type of college you have. But this is just Cal Grant, so this is just colleges within California. For example, if you were thinking about considering attending UC Berkeley, total cost of attendance, COA is cost of attendance. If we look down that first column, living in a campus residence hall, there's all the details about what the potential approximate costs are. At the bottom you have annually $34,400 would be a cost of attendance. And that can go down if you're living at home or living in an apartment. But just in terms of planning this out and looking and seeing what is the total cost going to be for attendance. We need to know that because when then we're looking at how much can you contribute, we have to look at total cost of attendance as well. So here's different cost of attendances for 2017, 2018 to give you just a quick comparison. Now, Shasta College, some people think, wow, wait, isn't that a little high? Again, that includes eating all year long, transportation, travel, miscellaneous books, and tuition. So a lot of people say that's already included in our family budget, then you're only looking at the tuition amount if they're living at home. So here's the scenario 1. Suppose you have a student, they have a 2.95 GPA. It's highlighted in red because 10th and 11th grade year, they were below the 3.0. But then you can see their senior year was much higher, so we're going to assume that they're going to get to that 3.0 threshold for a Cal Grant. If we look at then different amounts, you know, parents have $20,000 in savings, the student has $17,000 in savings, and they have an expected annual income of $4,000. All right, the key number for annual income for a student, anything less than about $6,200 does not hurt or count against them. If they are earning over $6,200 a year, every dollar amount over that, half of it is part of the EFC. The bottom right-hand corner of the screen says EFC. That's expected family contribution. That includes both parent and student. So if they make $10,000, that's a little bit over the $6,200. So then about that other $4,000 that a student would make, $2,000 of it would go towards expected family contribution. So in a case like this, the student is actually not contributing as annual income to any part of that expected family contribution. However, their savings is. So if we look at what we could do in terms of advice that they would give down at College Options, is they would say, okay, take that student's net assets of $17,000 and move it to the parent. So the parent's assets now go from $20,000 to $37,000. Student now has essentially no assets. Their earned income is not going to impact them. Family size of 4, assets, parents' income, taxes, etc. Their expected family contribution goes down dramatically. You see from $4,200 down to $869. That's a huge difference in terms of what is eligible for what they would expect a family to contribute towards college. What does that mean though? Your expected family contribution is taken into account when they look at different grants, loans, and scholarships that your child might be eligible for, knowing that they would have to make up a larger difference of the expected cost because the family itself is not expected to be able to contribute much at all. All right, so then when you're looking at finally, you know, whatever the total cost of attendance is, and let's say we have a total cost of attendance there of a college of $31,000. See how that works? They add all those values in, and that can vary a lot between colleges. So if we have a $31,000 school, and then we say, okay, well, the expected family contribution, and this is not based on that last slide of that one particular family. This is just a hypothetical. Let's say the expected family contribution is $5,000. That means your need in order to attend that school is $26,000. Well, then we look at your child and maybe they get some state grant, some Cal grant, local scholarship, because they're out there applying now, seeking out opportunities, applying for college scholarships from local organizations. They're going to get a loan, federal direct loan for $3,500, and then they get a work study that will contribute $2,000 towards their overall costs. And you can see that their total financial aid award ends up being $19,000. But if you recall, that was not enough. The total need was $26,000. They said, well, it was $31,000, family contribution was $5,000, so $26,000 is the need. They're awarded $19,000, so then you have this unmet need of $7,000. Where does it come from? That's a good question, and that's something you have to figure out as a family, but it gets much more attainable and reachable than the original $31,000 total cost of attendance. So it's the unmet need of $7,000 plus the family contribution, so they're looking annually at families contributing $12,000. This is just one potential example. All right. College offices have the ability to recalculate your expected family contribution if some major event happens in this since your last tax return. And they give some examples there. Again, go contact College Options, talk with them, and they can help you navigate that process. College Options, here's their website if you don't know where to go. Click on financial aid, and it has all sorts of information about how you can get some help, tools that you can use, things that you can utilize to make your decisions. Here's a family second scenario that I'll just do real quickly. Good grades, which means they're over 3.0. Good SAT scores. They want to attend a private university. We look at the married, family of 4, their liquid assets, other assets. So they have $200,000 in assets, $62,000 annual income, mortgage of $153,000. What they did is instead of originally having an expected family contribution of $12,281, they took those assets, they applied them towards the mortgage, and paid that down, leaving them only with $47,000 remaining because there was $150,000 left on the loan. So there's $47,000 remaining there in the red of parent assets. Your assets, your liquid assets, can impact negatively how much they, for them positively, for you negatively, how much they expect you to be able to contribute. Income is there, taxes paid, all sorts of other information, but all that to say you're paying about a third of what you would have paid originally if you drop that information out. When you're considering then what college to attend, this is just real quick, and information like this is available from all universities that you are looking at attending. Graduation rates, that is those who complete within 6 years, not a 4-year, but they assume that you take up to 150% of the expected time. And you can see schools like UC Davis has a high graduation rate. So 85% of their students will graduate within that 6 years. All right. What is their retention rate? They also retain. So the kids that get in tend to stay. And the ones that transfer in then also tend to stay as well. That information can help you in terms of, again, where do you want to go? Are you looking to stay? If you're at a school that has a lot of transition, a lot of people moving along and transitioning out, it's difficult for a lot of students to feel like they're committed to that campus because a lot of other people aren't, as well as graduation rate. I mean, ideally, you're attending university to get towards graduation, and looking at which schools do a better job of getting you towards that graduation day within 6 years is also very helpful. All right, that was a lot of information in a very short amount of time. All things said and done, what are the big key takeaways? Key takeaways is October 1st, getting your FAFSA application started on or just shortly after October 1st, having your previous year's tax reports ready. But once you file, you filed. So if you don't know what to do, you can't go in and then go back later and make all these changes and adjustments to it, which is why I suggest that if you don't know what you're doing, to sit down with someone who has either a parent of a past graduate, and they can walk you through the process, going down to College Options and making an appointment. They will work, as October 1st comes, their schedule will get tighter and tighter, but making an appointment with them and sitting down with what your information is, and they can give you some great advice on how to manage and work your way through the FAFSA process so that in upcoming years it does not take you as long, and also can help you find out what you can do in terms of reducing your expected family contributions to better offset or just to make yourself more available to more federal dollars for grants, scholarships, etc. That's a lot, folks. Hope you're going to do well. If you have questions, feel free to call me. But in many cases, I'll direct you to the experts. I know just enough to be dangerous, but not enough to really be that helpful with fine-tuning details with you and your process. But I wish you well, and we'll see you soon.